Hey guys, Frank Curzio with another live video. This one is titled Why I'm Aggressively Buying Stocks Right Now. That may be a surprise to a lot of people, especially since every single technical analyst told us to get out of the market September 2nd. Every single one of them have told me from what I read. And the market has been coming down. It's been a rough September, but not for all stocks. We saw the markets bounce back today. I think it's important to take a step back. We're all looking to really gauge the markets on a day by day basis and trading. But if you're looking at a 6 to 12 month outlook, which is reasonable, right? Anything past that is very hard to see. Uh, you're looking at the underlying dynamics of the market. They still exist in terms of being very, very favorable for stocks. So we have low interest rates. The Fed came out and said instead of going yield curve control (YCC) and saying the long end of the curve, they're going to cap rates long term. They basically provided yield curve control, but did in the short term manner. And so for the next 3 years, we're going to be at zero until we get full unemployment. So you have a low interest rate environment, which is very, very favorable for businesses. You're seeing M&A activity explode. You're looking at IPOs when it comes to Snowflake. You are seeing some crazy valuations here, what you have to worry about. But if you're looking at the underlying fundamentals of this market, some companies are out of control. We all know that, but there's just so many names that are starting to do well that are playing catch up as COVID that risk dissipates. It's you're seeing a lot of demand for future for whether it's travel industries, whether it's bookings, whether it's lodgings. You listen to these conference calls, and everybody's starting to book at a future date in 2021. Even cruise ships, people want to get out. You also have stimulus, not just on interest rates from the Fed, but monetarily, where and on the fiscal side, where they're going to continue to inject trillions into this market, right? So if you're looking at that landscape, you should be buying the dips. And here's why. I mean, you can just take today. I like sharing my screen. This is briefing.com, really cool site. I don't get paid by them, but just it really gives you enough. This is today, right now, right? So I'm doing this video. This is the market close. 3M Working Advisors explore the sale of division, 3.5 billion. I mean, we throw around 3.5 billion like it's nothing, but just this is just from like a few minutes ago. KB Home beats by 32 cents. They just blew out the numbers. Revenue is a little light only because of delays from the quarter outlook. But when you look at these numbers, I mean, they were pretty incredible. The home deliveries, the net orders for the quarter grew 27%. Uh, Demand remains strong. First 3 weeks up 32%. First 3 weeks of September. You look at Nike's. You see Nike's numbers. I mean, this is a blowout quarter, right? This is real demand. This isn't like, hey, we're trying to get back. This is real demand that they're seeing. They're blowing out the numbers. So many of these companies. And look at it's just digital sales makes sense. They have all their places open now. Still saying traffic's light to COVID, but that's going to pick up. Emerging market growth 5%. China growth finally coming back, right? We're seeing it there, and interesting. I wasn't saying China's coming back. Well, here's evidence that is coming back. Uh, just, those are two companies right there. But if you just look like Lululemon, reshare starts share repurchase program. Again, Beazer Homes announcements, which is great. But Newmont selling 11 royalties to Maverick. This is just for today, guys. This is for $60 million. I mean, it's when you look at all these deals just from today, it's pretty crazy, right? You see a market that Cisco awarded $800 million defense contract. KKR is looking to purchase 100 contacts for $3 billion. I mean, it's kind of amazing when you just see all these headlines, but the market is ripe to go higher. It's going to be, buy the dip market as long as we have low interest rates. We're going to have a Fed that's scared. Even we're going to election season, a lot of risk, but even past that, you just see a market where the Fed is going to support no matter who gets elected. Don't want to talk politics and get you guys crazy. We to get the low interest rate environment, more money coming fiscally. You're going to see that's going to lead to more M&A activity, and stocks are still the best game in town, especially when you got the 10-year where it's sitting at 0.6, 0.7. You're looking for dividend paying stocks. There's so many tailwinds for stocks right now. So don't get caught up in a September and it's down. There's still so many ideas out there that make sense. Look at Nike, seeing a lot of catch up from these players. And that's why I continue to buy stocks and I continue to be long, because I have a very, very positive outlook, especially for small caps over the next 6, 12 months. And you should too. So I'm Frank Curzio. As always, I'll report back to you guys soon. Take care.